Yep. Seriously, look. So you have to.
All right. Well, welcome everybody. We're going to get started. It's 3 o'clock.
Yeah.
And as I was telling Joanne a couple of minutes ago, I think there's more content than I can effectively cover in 90 minutes, so we're going to give it a go. I'm also going to be testing out my skills with our new AI video camera up here, which should now follow me over to the side.
Nice.
Yeah, you see it moving?
Yeah,
so we're trying that out. There may be a recording of this class if we're lucky. Yep. Very fancy. So this is our first time giving it a run through this content. The content's not new, just the way that I've organized it and everything is. As I mentioned, I'm not sure if we'll get through quite everything today because we're gonna get to where we do some math.
What?
Oh yeah, and all that. So thanks for coming and being my guinea pigs. For posterity, perhaps for the recording, my name is Alex Fensky. I'm the team leader here at Keller Williams Elite, and I don't know. I learned a lot about operating a business prior to getting into real estate, and so some of these concepts I've learned from accountants and attorneys and things through the years prior to real estate, and then ended up realizing that it's not common in real estate for content like this to be taught. And people aren't talking about how to keep your books and how exactly to handle your money and how to prepare for taxes. And later on when we get to talking about business entities and tax advantage trust accounts and all that stuff, this is all stuff that business owners need to do in order to keep more of your money and build on that. And so did a training survey and got a lot of feedback that said people wanted to hear more about this. So I wrote this and here we are. So I've broken the full course into 3 modules. Give me a second here. I have to activate the show there. There we go. I've broken the course into 3 modules. You have slides there printed out just for reference. I know it's pretty small, but today is keep your money. So we're going to talk about managing expenses and making smart spending decisions. We're going to talk about separating your business from your household and understanding a profit and loss statement. We're going to get into some basics of planning for income tax. A lot of this is going to be overview from the start level, and there's more to learn about all this than what we go through in a group setting like this. But I'm pretty confident that what we go through today will achieve these objectives for you. Now, part 2, which if you want to put it on your calendar, part 2 is already on the schedule for October 27th, same time, same place, 3 o'clock, October 27th. Basically a month from today. So at that session, we're going to talk about tax shelters. So number 1, business entities, self-employment tax, retirement accounts, and then other tax advantaged accounts, including self-directed ones. So there's some really fun stuff that we'll get into in there. And then lastly, we're going to go into in part 3, which I'm imagining is going to be in November. We'll be investing in real estate, but not just like kind of the basics. I mean, you guys know about real estate. What are some of the things you might not know about investing in real estate and what makes it different and how it plays out over the long term, because it's very much a long game. And we'll go into some of the concepts that you need to understand in order to confidently invest in real estate or continue from where you're at.
Ruben's here.
So that is the, thank you. Come on in.
I'm sorry, I'm late.
All right, so that's the whole overview of the course, and obviously today is just part 1. Come on in, my man.
Sunshine.
Now it's a party.
Where do you want to sit?
Doesn't matter.
Sit with me. We're fighting over
Seats
who's
taken.
going to sit with.
When you and I sit together, that's one trouble.
We'll get separated. Thank you.
All right.
Put my yo-yo in the drawer. I know.
I'm just checking to see if my camera's following me. It still is. It likes me.
Are you recording?
It likes me. Yep. And then lastly, I forgot to hit this point. We will go into some weird financing stuff for real estate too, because I know financing is one of the biggest challenges for us as self-employed people in real estate. So today, again, 2 parts of the content today: managing expenses, and then going into banking and bookkeeping. My objectives for what you'll walk out of the room with today are just becoming aware of your expenses and in some ways that you can do that. Learning a framework to evaluate spending decisions. Should I buy this service? Should I subscribe to that thing? Separating your business from your household, it's really important. And we're going to learn how to do that today. Understanding a profit and loss statement. We talk a lot about them, and we encourage people to get one put in place, but okay, cool. You get a profit and loss statement put in place, and now what? What's that supposed to do for you? And how do you look at it in a way that helps you make decisions in your business? And then lastly, again, we're going to start talking about planning for income taxes. So if we accomplish that stuff today, will this be a good use of your time?
Amen.
Yes.
Sweet. This is my favorite slide. Okay, so I told you a little bit about what or who I am. Here's what I'm not. I'm not an accountant. I'm not an attorney. And I'm not a financial advisor. I'm not even a managing broker, so I can't even, there's not a lot I really can tell you legally. So this is just a conversation. It's just a conversation. I joke about this, but I really do mean it. We're covering the overview level stuff in this, all right? We're going to get into stuff like income tax brackets and things like that. You can't just take that stuff at face value. You have to know there's a lot more that goes into it, and especially when we get into Module 2, when we talk about the tax advantaged accounts. There's so many rules around them about income phase outs, and if you have this, you can't have that, and you only have this many of those. There's a lot of rules around this stuff. Part of what we're going to go through is how important it is to get the right advisors on your team, because they have to know that stuff. You can't go and become a master of all things. You need to be a master of real estate. You need to get the team around you that can answer your questions about the stuff we're going to talk about here. But you have to know enough to be able to ask the questions. And you have to know enough to be able to identify
make sure you have the right people.
Exactly. Exactly.
You gotta guess.
And if we go through, come on in. If we go through the stuff today and you're like, oh, I have a person for that and they've never told me anything about that, maybe that's a different conversation you get to have. Hey, what's going on? Here, grab a notes. There you go. Is it dog? Dog can pen first.
It's okay, we just got started.
So, yeah, we're moving fast though. I already gave the disclaimer. Don't listen to me. Don't listen to me. I can't tell you any of this stuff. Check it all with your appropriate person. And again, if they haven't told you about stuff that's in here that they should know about, you might want to start shopping for a new one. So let's dig in. You guys all have each slide printed out in your slide package there. I know a lot of the text in there is very small. It's not intended for you to necessarily read it. It's just so you can follow along here and you can make your own notes. Okay? And like I said, God willing, we'll have a recording of it. We'll find out how that goes. So again, today we're going to talk about managing expenses.
Can I borrow one of your pens?
Yeah, go ahead. Managing expenses and then investing accountably. So part one, managing expenses. This part of the show is not long, honestly. There's only so much you can do. Number one, what's the difference between an expense and an investment?
An expense is something, it's more of a liability, something I have to pay on.
Okay.
Investment is something that makes me money.
Bingo. Yeah, the difference between these two things is the expectation of a return.
Yep.
And it's important when you're thinking about your business, what are the things that you have in your business that are an expense? I'm just spending money. I'm getting that because I feel like it. I'm getting that because I just need it. Or what is an investment? Meaning I have an expectation of getting more money back than what I spent. You need to understand that difference when you're looking at, should I keep doing this? Should I keep paying for that? Well, are you expecting a return? Should you be? And if you are you getting it? So we're going to talk first about expenses, and then we're going to talk about investments. Now, I don't mean like going into like stocks and bonds and real estate. I'm talking about the things that you spend money on in your business. All right? Everyone get that difference? Everyone on board with that? All right, cool. Oh, look at that. Yeah, that's awesome. I 100% did not do this slideshow.
Of course. You didn't have time to do that.
I wrote the content,
Didn't
do the slideshow. That's right. So let's talk about eliminating expenses. I want to go through a myth here. And I hear this. I hear this a lot, where people will be like, "Well, that's a business expense," And when people, those words come out of people's mouth as though it means it's free. Right. They're like, "Oh, that's a business expense. That's a write-off." Hey, let's be willy-nilly because that's a write-off. Well, so tax deductible doesn't mean free.
Absolutely.
And here's what I mean by that. Let's say you have $1,000. Now, if you spend it on something that's tax deductible, what do you end up with? You spend $1,000 on something. What do you end up with?
All right off.
The item itself.
Yeah, you end up with the thing that you bought,
Yeah,
but you don't have the $1,000.
right.
So you got something, and now you have $0
Right.
out of this 1,000,
Right.
right? What if you didn't do that though? Just out of curiosity, what if you didn't? What if you just kept the 1,000?
Then you would have 1,000 and not have the item.
Well, but you're gonna get taxed, but you don't get taxed all of it.
Right, depreciation?
But you might get taxed like
If you buy the
maybe
thing.
30% of it,
Yeah.
right?
Mhm.
So you're gonna end up with like $700.
Right.
So sometimes I feel like people will buy or subscribe to something simply because it is
They
deductible.
think it's 100% deductible.
But now you have that thing, and you still paid $700 for it, tax equivalent.
Right.
And I think a lot of our spending decisions, especially in real estate, where people are there's like an entire industry called people selling crap to real estate agents, right? I mean, it's constant, constant. And there's only so much.
Especially fourth quarter.
Right? There's only so much the guy or gal can take, and sometimes you succumb. And don't answer the 585 area code calls. I'm telling you, like for real, don't.
I bought two.
So I just want you to operate with an awareness that tax deductible does not mean free. You can spend the 1,000 and you'll have $0 left. You better really like that thing you spent the money on, because it's still spending $700. Because that's what you would have if you didn't buy it. You're gonna pay tax on stuff, on your money, okay, fine, but it's not the all or nothing that a lot of people make it out to be. You guys hear that, right? Like people say that, well, that's deductible. Swipe, swipe, swipe. Don't do that. This is the devil that sneaks up on us. Recurring expenses.
Yes.
I lose my debit card like every 3 months.
Uh-huh. Yep.
It is a beautiful thing.
Recurring expenses are those things that someone sold you with a script that sounded something like this. Well, it's only the equivalent of a cup of Starbucks a day.
Yeah.
Yeah.
Well, first of all, a cup of Starbucks is overpriced to begin with.
That's
Let's
correct.
can we just get real
Let's
on
keep it
that?
real.
Okay.
How about I don't drink
Or
coffee?
just
So-
do what you know with your own money.
So you got your $5 frou-frou latte, whatever, that you buy, 7 days a week, right? So now we're talking, it's 30 days times $5. Well, pretty soon, what was that, $600 a month, right? I mean, so a couple of Starbucks a day sounds innocuous, but you subscribe to enough of those things, and you look back and go, man, why is my account balance so low? Well, those things have stacked up on you like the items in your closet, to the point where you're not even sure what's in there, and you won't know until you start digging it out.
Right.
Anybody here, do you suspect that perhaps if we were to look at a bank statement, you might find some charges for some subscriptions that you're no longer using?
Just looked at one
Absolutely.
yesterday.
How about some that you've never used?
That's the
Yeah,
question.
that's another
That's
one.
the real question.
Yeah.
Like Bum Bum
Uh-huh.
and like the ACM cards that I'm proactive. So when they talked about it, let me go ahead and sign out
Yeah.
and send one damn card out.
Mhm.
Oops,
Well,
report.
there's yeah, the mic might not have picked that up. You have the best intentions, and sometimes we have future self bias. You guys ever heard of future self bias? It's when you think future you is like a more put together version of current you. That's a real psychological
But
thing.
because you want it, you feel like
Right. Oh yeah. Tomorrow, when I'm more present in my life, I'll use that.
Yeah.
Uh,
Not until you get some more
right, like a gym membership.
Yeah.
So,
Yeah,
so
everybody.
yeah, beware of the future self-bias. And also, there's another quote, I think it was from Good to Great, or no, there's another book where they say, there will always be more great ideas than there is bandwidth to implement them. Always.
Always.
So you have to evaluate your ideas and make sure that you are basically going through a process to identify, will we actually execute this or not? Is this a great idea that we can't do right now? Or is this something that we can really actually commit to? So your recurring expenses are something in particular to be careful about. And so I like to tell people one of the best ways, and honestly it may be the only thing you need to do in the vein of eliminating expenses, and that's the bank statement exercise where I referenced it. You're going to print out your bank statement or your credit card statement. So I can grab a notes page there and grab a seat. You're gonna print out your bank statement, and you're gonna go through it line by line. And you're gonna acknowledge each expense that's on there, and you're gonna evaluate it and say, do I even know what this is from? Right? Was this another victim of my future self-bias that past me decided future me would do and I didn't? Can I cancel this? Am I getting a return from this? And just evaluate each thing. Simply going through that, I can almost guarantee that you can probably eliminate at least 3 recurring expenses. Anybody sitting in the room, at least 3, maybe a lot more. Sure. And when I do this from time to time, I mean, it usually accounts to a few $100s a month.
Yeah.
And if you did it once, and it's been a while, it's probably time to do it again. It doesn't take long. Print the thing out, you look through it, and you say, all right, just ask the question. What is that? Am I still using it? Or am I just hopeful? And am I getting a return? What's my ROI on that? Yes, Nikita.
So with just like the bank statement exercise, just to add another one, Angie forced me to do the credit card exercise. So even though, you have the bank statement for the business, but you may also have a credit card for the business.
Yeah.
And I am so surprised when she makes me think back 3 to 4 months, like, okay, well, what is this charge? And I'm like, no.
It's a write-off.
Well, that was past Nikia.
So, right, so, yeah, that was an experience right there to see why the heck Apple, which I don't pay attention to it, and I have no idea what I'm paying $4.99 a month for, but I'm paying $4.99 a month.
It's to be unique. It's to feel unique about yourself. That's what Apple is about.
I wanted to blame it on the kid that he subscribes to.
Right. Well, we just did the same thing. I was looking at now, bears mentioning, this works on business and personal accounts. We do the same thing. I was looking through our personal credit card statement, and I'm like, Kindle Unlimited. We don't have that.
Who?
Kindle Unlimited, and then there was another charge for like Amazon, and I'm like, well, oh God, there's a lot of charges for Amazon. I mean, Amazon Music, right? There's the unlimited Amazon Music.
Yep.
And I'm like, wait a second, why is Alexa, bless her heart, always telling me that you need Amazon Music Unlimited to play the songs that we want to play, but I have a charge on my credit card for Amazon Music Unlimited? Some doesn't match up, right?
Yeah.
So, yeah, same deal. Business and personal, bank and credit card. I call it the bank statement exercise. You should do with your credit card statement too. Most of my business charges hit to my line of credit, and then the bank is like payroll and commission and stuff. Yeah.
I'll get there.
So throughout the course, we're going to be talking about action items. Hint, hint, hint. This might be a good action item that you want to take out of today. Can everybody do that? Like, I'm not saying are you committing to, but everyone could do that exercise, right?
I
Just
do
think
it
about
every
it.
Friday, and like you mentioned, my lead gen, I know what it is.
Because wait, Nikki sent me her P&L, and I looked through it, and I asked some of the questions that I'll show you later about what to ask, and I asked her a question.
Oh yeah, I know what it is. I know what I'm paying for, and the thing is, it is time to review the ROI on
There
it.
you go.
And on one of them, it's 0. So yeah, but I have a contract on it.
Change is afoot.
So I have a contract on it, so I know when the contract's up, yes, we will not be continuing our relationship.
Well, and some things take longer, right? Some things you just know you're laying out 12 months before you have an expectation of return. We're going to talk about that in a second. But yeah, it's always good to ask the question.
It's that whole get an evaluation on your house so you can try to get
a free CMA thing?
Yeah, I said that's a bunch of.
Yeah. I've had people tell me that that's back to working again. That got saturated though, and as data propagated, it became real easy for anyone to get a value on their home from any of like 14,000 websites with the click of a button. The free CMA thing stopped being effective when I was using it. I got some leads from it for sure, closed some deals, but that was like 5, 6, 7 years ago. So I don't know. Oh yeah, and Nikki also mentioned another alternative to this exercise, which is losing your credit card. There's one sure way to stop those recurring charges, and that is to lose your credit card.
He didn't tell us that, guys. Remember, he put the
Right.
disclaimer up there.
Or you could give it to me, but I mean, I'll be very responsible with it. Yeah, you can use your credit
Or
card.
you can say, that's a fraudulent charge, that is not me. Oh, we have to discontinue that card, okay.
That's right.
We'll give you your money back.
Guys, this is about all you can do when it comes to eliminating expenses. And there's only so much you can eliminate because you need to spend money to operate your business. I mean, there's even at its base level, you have to be able to pay for the basic things that you use to market your services, to have your cell phone, to have access to command or whatever. Like you have to spend some money. So there's only so far this you go. You can't get very far obsessing about your expenses all the time. You need to keep them in check, but once you got them in check, okay, move on, because it's time to talk about revenue. It's time to talk about investments and revenue. Yeah, you're not going to cut your way to a big business. You just can't do it. So let's talk about investing accountably. Here's another myth: the one-to-one return. Who's ever heard this one, or maybe even said it yourself? Well, if this cost me $5,000 and I close one sale and I make $5,000, I made my money back, right? Well, didn't you? I spent $5,000, I brought in $5,000. Didn't you get your money back?
No, you didn't make nothing.
You did not.
Nothing.
You did not.
You lost your time.
Absolutely.
Yeah, and this is another one of the scripts that the selling stuff to real estate people industry uses. That one deal will pay for it, right? Tom's up here. Tom can't even talk right now. He's like angry at all the things that he's been trying to get sold over the years. We won't ask whether you bought any, right? I was gonna say. Well, part of the issue is that you have to spend time and money to get that dollar back. I mean, if someone sells you a service or something that's supposed to generate leads or it's supposed to do whatever for you, and you get a lead, the lead doesn't walk in the door in the form of a $5,000 commission. You're going to have to spend time and money to turn that into a commission check. So it's already not even. But then again, a gross revenue dollar is not the same as a dollar that you've laid out. So when you take in that commission, you'll have company expense, unless you're capped, but even still, right? You have some expense there. And then you have your operating expenses and everything, because let's say you operate your business at a 50% profit margin, which means that for every dollar you bring in, you actually net after your expenses 50 cents.
50%
Well,
if you're lucky.
and this is like a solo agent that's operating pretty well, right? Then that means you got to need two. So grab a package.
I'm sorry, teacher. We can start now.
So that means that
That begins now.
that means that you would actually need $2 to break even on that one you spent.
Right.
So if that's the case, well, yeah, we didn't talk about taxes, because then you actually have to pay taxes, and that's not included in the 50% profit margin.
So let's just say 3 to 1.
Really, it's more like 3 to 1. But that still doesn't account for your time. So even 3 to 1 doesn't account for your time. So when you talk about with this 1-to-1 thing, it is a myth. It is a myth. A 1-to-1 return is a loss. Actually, a considerable one.
Yeah, I agree with the loss thing, because you're even losing money that you might have been making on interest.
Yeah, just by not spending
Not
it.
spending it, right.
Yeah. So just remember that this spend 5,000, make 5,000. That's a big loss, because on that 5,000 you made back, you spent a lot of time, and you maybe kept half that if you were lucky. So don't fall
There's another
victim.
myth that you didn't tell people, and that is that when you go to a client, you say, "Oh, you make all that money." No, we don't.
Oh, they kill me with
There
that
you
one.
are.
Well, yeah, I actually have a pie chart in my listing presentation. It shows, it's basically my P&L turned into a pie chart. It shows them where all the gross revenue goes, and they see that measly little slice that I take home to my poor family.
They say you take 8%.
Yeah. Right? Yeah. I'm in the air conditioner.
Poor little man.
Right.
Trying to raise your children. There's some more. All right, about a slice of pie.
I pay you 7%.
Alex, your camera followed you to the thermostat.
Say what?
It followed you to the thermostat. Is it
Well, then it went
for
back.
your boys?
So, will you come with me?
What's that called?
It's not coming with me.
Oh.
Okay, so if I gotta do this again, if you do that,
There,
now it's
it
gonna
acted-
work.
I
You
see
see,
the
it lost me
motion.
because I left the room.
I see.
Okay.
I thought it
Welcome
turned
back,
out
friend.
right.
All right, so don't fall victim to the one-to-one myth. It's a myth. It's a lie. We have determined that as a lie. Okay. Who has read the Millionaire Real Estate Agent book? The rest of you guys, you have to learn something. When you're in a room at a Keller Williams training and someone asks, have you read the Millionaire Real Estate Agent book? Even if you haven't, you have to raise your hand. Okay. You got to be like, yeah, I read that book. And you go, they talk about red light, green light, right? And red light, green light simply means that you are defining in advance what is an acceptable return on this investment and how are you going to measure it, and you're creating a checkpoint at which you're going to decide to continue or to stop. And this is a little bit of preparation that will really help you out a lot with this whole concept. So in the MREA, when we're talking about specifically lead generation expense, they recommend looking for a 5-to-1 return. Now remember, we said 3-to-1 still doesn't include your time. So maybe 4-to-1 includes your time, and the 5th is profit, right? So if you want to be profitable on something like a lead generation expense, you want to look for a 5-to-1 return. Now, I don't know, does anyone here know off the top of your head for one of your lead sources? Do you know what your multiple is?
You know, I use the dialer, and you know, when I pay my arch agent $220 every month, I feel like that's the most profitable, that's the highest ROI lead gen thing I have.
Okay.
That's than all my other lead gen sources.
All right, that's fair.
Is that fair?
Yeah. What I would challenge though is your ROI on what you do to market to your sphere of influence and past clients.
Oh.
Usually when I measure mine, it's over 20-to-1.
We do raffles and
Right, but I'm saying the return.
He said
All the revenue you get off of
that's
what you spend on your sphere and past clients.
yeah, it's pretty high.
When I measure mine, it's over 20, 22, 23
It's
times.
pretty high.
Yeah, that's why it's the best source. Because you're not going to get that through most other things. Unless you're doing something illegal, which I already told you, don't take my advice.
Right, but what would those things be real quick?
Right? But if you did,
Just so we know not to,
right?
not to.
So that means if you spend 1,000, you're going to gross 5,000. If you spend 5, you'd be expecting to gross 20. That's very doable. You know, when you run the numbers on something like a geographic farm, you're going to have to spend for a while before you start taking back in. As long as you've chosen a good farm, the money's there. You know, the money's there. There's a lot of ways to be profitable in this business, and you just have to evaluate it up front and decide what's my acceptable rate of return, and then redefine your checkpoints. How am I going to measure that? And when am I going to measure that? When am I going to actually go back and look at this? And then put it in your calendar. Like physically put it in your calendar and say, on that date, I'm signing up for this service right now. And on that date, I better have 3 pendings from it. And if I don't, I'm going to cancel it. Or I'm going to check it on that date. And then another, however much longer is when I'm going to have a decision point. I don't care what you do. Just do something consciously. And put a note in your calendar so that you force yourself to look back at the money you decided to spend and see if you're getting the return that you got from it. If you're not, cut it. At worst, keep the money. At best, find a better investment for it, right? Now, do pay attention to the length of time. Because I mentioned the Geo Farm, and I use that example specifically because, with something like that, if you want to make a checkpoint 3 months in, I can almost promise you won't have any money in from it. That takes a while to develop, that stream of revenue. So decide how long it is an acceptable time period for you to be able to count on that money coming back. So that's the concept of red light, green light, and the 5-to-1 return. You guys have any questions about this? It's really attainable. You just have to be purposeful about it and pay attention.
I think what stands out to me like anything else is this all boils down to, do I get specific enough and intentional enough to put it in my schedule to evaluate? And there's some heavy lifting up front to make, if you haven't been tracking clearly, find out what you're actually spending and what you're doing.
Yeah.
And then a commitment to consistent evaluation.
You can even do this real sloppy and still get value from it. I mean, even if the next time that 585
Yes.
even if the next time that 585 number calls, you say yes, and this conversation right here echoes in your head, and just in that moment, you just put something 6 months out in your calendar and say, remember to check that thing. You know, I'm pretty sure I know who's in the room. I don't think any of us are closing 30 deals a month. Even if you manually need to go back and track and go, which are the ones that came from that, you'll be able to do that. And you'll be able to pretty quickly see whether it's worth it or not. It's very doable. It doesn't have to be perfect. Just do something, right? It's on my camera.
Get tired.
Is it coming with
He couldn't keep up, man.
It's not moving anymore.
He's taking his union break.
When you give it that little stop sign, it's supposed to either follow you or stop following you.
It still knows your thoughts, though.
All right. So, any other questions about investing accountably?
No, I think this is something that Kelly should really spend time with.
Nice. Yeah, just Kelly.
I'm so glad Nikki's here.
So the last concept here is, you know, get some other people involved. There's other people that are willing to help you. Another set of eyes will help you eliminate blind spots. They're going to see things that you don't see. So you can go to whoever your contact is here on the Market Center leadership team. If you have a MAPS coach, you go to them. Right? A peer accountability partner, although you better make sure that there's someone that's ready, willing, and able to call you on the carpet. Otherwise, that's not a good accountability partner. Your spouse and kids can be the fiercest freaking accountability partners. My God, they're relentless.
Vicious.
They're relentless. For real. Man, they don't understand the business model, but they will not let you go.
You're a terrible mom.
And you know, maybe some other person who's skilled in finance or something like that. So get some other people involved, treat them like your board of directors, and you can even tell the people through 585 area code that you need to meet with your board. And they might be like, "Smoke? What do you mean your board?" Like, doesn't matter. It'll get them off the phone. That's from our first section here, managing expenses. Here are some of the topics that we covered. And if you have an aha, say it out loud. Also write it down though. Writing it down will help you remember it. You're not going to read the notes again. Don't lie to yourself, but it'll help you remember. Yeah.
My aha is the bank statements.
Yes.
You want to go over everything once, but it was really an aha when the kids said, also check your credit card statements too. And the Apple account, those are my three.
Yeah, and definitely don't use Apple. Just go with Android. Yeah, that was a great point.
My aha definitely is you know, this teacher here is in preparation of reviewing my P&L, so I'm scared. No, just but recognizing. So I love the refresher. It's definitely recognizing where the money goes, because as we pull money in, that myth definitely, I love that. That was my second aha. The myth, the one-on-one.
The one-on-one return.
Because we make these lump sums of money and then we automatically assume like, hey, I just got away with. No, you didn't. Like, really, you really didn't clear. Like, but you know, it gives us this false hope to really thinking that we broke even when realistically we should be pushing for that 5 to 1, or even recognizing 3 to 1 is like the bare minimum.
Yep. You reminded me too. Anyone ever heard the joke that real estate agents count their money 3 times?
No.
Yeah. Well, you count it when you get the listing. You count it again when you write the contract. And you count it again when you close it.
That sounds about right.
Listen, I'm speaking truth up here only. Okay. Oh, I hope I didn't turn the camera off when I did that. I gotta make different hand motion. Oh, I did.
See.
Oh.
No, don't worry.
Okay, it's back with you.
Yeah.
Any more ahas on the first section here? Really?
One quick to set a time when you're going to review those expenses and don't become annualized.
Yeah.
Set that time and move on.
Yeah, if you don't put it in your calendar, I guarantee you it's not happening until you come to the next class of this, and we talk about doing the bank statement exercise. You're gonna be like, yep, yeah, put it in your calendar. All right, good to keep moving?
Yes.
Banking and bookkeeping. This is a bit more lengthy session here, so we got the last hour-ish to spend on this. We're going to talk about separating your business from your household, understanding a profit and loss statement, and planning for income tax. A couple lighthearted topics, no big deal, right?
Yeah.
Ready?
Co-mean link. Guilty as
Oh,
charged.
wow, that was not convincing.
Just rip the Band-Aid off and do it.
Are you ready? I taught my 5-year-old Hawk. I taught him to say whenever anyone asks him, "Are you ready?" He used to say back, "I was born ready." So he does it now. He said his baseball coach. He got up to the tee of his first baseball practice. He said, "Are you ready?" He said, "I was born ready."
And he actually was born ready.
Yeah, yeah. All right. Why is it important to separate your business from your personal financial life?
Because you'll be guilty of co-mingling.
Guilty of. I need a gavel. You are hereby found guilty.
I don't think it matters for us, but it's just easier when tax time comes to.
Oh, it matters.
Tax. Oh, it matters.
Oh, it matters. Oh, it matters. Joanne?
No, I was stretching. No.
Oh, it's like an option where you can go this, I'm calling you.
agreeing with, yes, it does matter, because when it comes down to making a mortgage, like when I was telling you that I had to apply for a mortgage, they wanted that P&L expense.
They always will.
Yeah, they always do.
Yep.
I'm
Also,
saying,
just
I'm not
clarity.
saying it doesn't matter, but I'm saying it's easier that way, but I'm not saying every realtor does that.
They should.
Well,
I won't say most don't.
here are the reasons.
I know, I need.
Here are the reasons that I
Only
was
one you
able
gotta
to
worry
think
about
of.
is you.
Right? I think number one, without that, how do you understand how much is really going in and out of your business and in and out of your household? I mean, let's say you're looking up going, man, we must be spending too much money because there isn't enough. Well, where's the problem? How can you even go about it? That bank statement exercise is kind of tough when it's all your business and your personal stuff all mixed in. It makes it harder to do that. The other thing is, if it's left to you to manually divide out, separate out stuff from a single account, say this was business, that was personal, and you're going to do that during stressful tax time, you're going to capture all of your business expenses? No, you're going to miss them. They're everywhere. Your little shoebox of receipts ain't happening. You're missing stuff. Promise you. So separating your accounts will keep it cleaner so that you can know everything on this page. This is all business. And I know that everything on this page, there's no business expenses. That way you can capture all of your deductible expenses. By the time tax season comes around, it's really easy. Who does a P&L every month and then also has your taxes done? It's easy. It's not a big deal, like at all, really. Most of the work's done already. Lastly, it allows you, it puts you in a position where you actually can produce financial statements for your business, like Joanne said. You really can. I mean, it's so hard to do it without that. When you have to try to pull, you have to manually do everything. If at least separated out, you can put together a basic financial statement really easily. And you're going to need it if you're going to borrow money. You're a business owner. They're going to require it, Yeah.
So now that like I'm on my own little payroll.
Yeah.
So when I go to buy a house, I can use my payroll because I get it on the 15th and the last day.
Yeah, you have to separate your thinking now because you have a corporation, and you are not your corporation.
Right.
Your corporation is a corporation. Now you happen to be the owner of it. You are also an employee of it. So from that, you have a salary for yourself. You're paying yourself. You have W-2 income because you work for a company. Separately, you also have net profit from that company as the owner. You call that dividend. So you use all of that.
Oh, okay. It's all
Oh, yeah. But it's treated differently. Right? They're going to treat your W-2 income, they're going to go, that's your income. And then the profits, they're going to average over a period of time and all that stuff. It's different income. You just have to think of yourself as separately from the business. So it's important to do this. And here's how you can do it. Let me just take a quick poll. Yeah, it's weird asking people about, like, we're getting into some serious stuff. We're going to talk about taxes. But, like, who's already got their stuff running separately, where you've got all your business stuff in certain accounts, all your personal stuff in others, and they don't mix up? All right.
Okay. It never not mixes up. Like my car insurance, I told him to pay it out of my business account, but last month he paid it out the personal, and I'm like,
Your husband?
no, my insurance guy, and then no, my insurance don't pay. My husband don't pay that.
Why is it not coming out monthly? Oh, he just paid.
Yeah, auto pay is a beautiful thing, by the way.
No, I don't do auto. I don't.
That's why
I don't have to do that bank statement exercise every month because I don't do auto pay on a lot of stuff.
Okay.
I know how to pay my bills on time. I don't.
Yeah, yeah. You just talked about an issue with which account things put me out. So.
Need something special.
So here's how you go about it. You set up one checking account for your business. This is where your commission deposits go. Probably don't have any other income that should go in there. It's just your real estate income. If you'd like, you can have a separate second business account for like savings, so that you have two. But you don't have to start. You can just set up one account, and then have one credit card or line of credit for the business. Put your expenses on there, or if you're not comfortable putting them on credit and paying it off every month, if that's an issue for you, put them on your checking and your debit, whichever. But set aside one for each. And what's important to know is that these don't have to be business accounts. They don't have to be in a business name. So if you're going, I don't have a business entity yet, that's fine. Just have a separate personal account, and then make that be the one that you use for your business stuff. And you can still have it separated.
Alex, is it also a good idea to set up a separate account for taxes, like we get on?
Yes.
So that's like a 201 level, right? It is a good idea, and yet to start, just have a checking account and a credit card that are business only. Start there. If you don't have that yet, start with that. They really want to be on the floor, Ruben. Just leave them. They want to be there. They like it. They like this their spot.
They're ready to escape. Just don't worry about it. Don't worry about it.
So these don't have to be business accounts. You don't have to have a business entity. You don't even have to open new accounts. If you have some existing accounts that are laying around like socks on your floor, choose one of those. Be like, I pick you, and choose one. So you can do that too. This is important too. Although if you're doing things right, there's not going to be a lot of card swipes in your business. But nevertheless, I still, I carry my debit card and my business credit card in my wallet with me, so that if I do need to buy something, I don't have to play the accounting game. I had to put it on my personal account. I have to go transfer it. I have to go tell the bookkeeper, and then it's just horrible. No, just put the freaking cards in your account. Use the right card when you buy stuff. Although, my card swipes are they're rare. When you go on a trip, that's when you can have those. But I carry them with me anyway. So that's simple, right?
Oh, and put it in your Amazon account, guys.
No, your wallet? Your wallet?
No, your business card. Put every card in your business, your Amazon account.
Well, just be careful, because it'll default settings and it'll switch it up on you. And
Yeah.
Be careful with your bounce check.
Even better, set up a business Amazon account so you don't cross lines
There
up.
you go.
Yeah.
Oh, no. No, that's not free.
Huh?
I don't want that expense. They're not
Not
free.
free. I
Yeah, they are.
scratch that
They
out.
are.
Yeah.
They told me it's going to be $300 for you to sign up for this. I said,
You got lied to.
just got your finger.
You got lied to, or maybe they're just saying like Business Prime or something. I just had a regular business account, so that way I can give other team members access if they want to put in orders, and I can approve them or whatever, right? So, all right. So this is how to do this. Anyone that isn't already separated, or you don't have them separated, you can do this, right?
Yes.
Remember when we were smelling out action items, like stuff that you might do from this? Another big hint right here.
Been doing this for a year.
All right. I want to talk to you about paying yourself a salary.
Yes.
Who in here currently lives off of a salary that you pay yourself?
And my profits.
Okay. So I'm glad we're talking about this. This changed things for me big time when I started doing this years ago. And when I started doing it is after I got married, and we merged finances and stuff. And then my wife would have these questions like, "How much money are we going to get this month?" And I would be like, here would be my answer. I don't know. Some people can live with that, and by definition, if you're married, if you are the one who can live with it, chances are the other person can't, right? So it caused me to have to go, well, yeah, how is it then that we're going to have a budget and know how much money we have to spend and stuff, which seem like basic concepts, if I don't know when or how much I'm getting paid? So I did this. I put myself on a salary, and once you go salary, you never go back. I don't know how to say that. I'm for real. It's a really good way to do it. And we're going to go through some things. What's your question here?
You just popped it up. So I was going to ask you personally, since we get to pick your brain, when you did decide to go into this life of salary, you're paying yourself directly from the business. How did you budget, or that's what I'm probably challenged with right now. So
yes,
what to pay myself.
Yep.
I assumed I need so much, but I literally see that, like, I guess, honestly, I pay myself too much, almost. It's not a bad thing, but I'm like, well, obviously that means I'm doing something right, because when it comes to separating business and personal, I'm really not using as much money as I thought I would need monthly.
Okay.
So how did you determine what
Well,
amount?
I think you need to, I mean, this is the benefit of being in business for yourself, is you decide what's a living wage. You decide the amount of money that you can operate your household on every month.
Can I take a stab at this?
Huh.
I pay myself of what I need to pay in taxes.
Say that again?
I talk to the accountant. I say I should be making this much money this year. This is my goal to make this year. What do I need to pay in taxes? So when I do my payroll, they take out those taxes and she sends it to the IRS.
And if you make a lot of profit, that still won't be enough.
I know,
We're going to talk about
but it
estimated payments
offsets
later.
it by a lot.
It does. Well, yeah, you're going to pay some withholdings if you're running payroll, meaning you
Yeah.
have a business entity and you're on your own payroll.
Right.
What I'm talking about here could be that, or you could, if you just set up the account so you don't even have a business entity, you can pay yourself a salary by having an automatic transfer every month or every 2 weeks or whatever you want in a certain amount. So what does this do? It keeps you from spending all willy-nilly, and it allows you to operate your household on a budget, so you know how much money you have to work with every month.
So can I take a personal stab at?
Go ahead.
So let's say family budget, we already know what it is.
Okay.
But now business is not doing the exact same thing that the budget had been doing the last 6 months.
Yeah.
And she
So
calls and says, Nakia, are we running payroll? And I have elected to say no sometimes
Uh-huh.
because I have, you know, what I thought I needed monthly
Right.
sitting in personal checking. But if the business is not doing good and now I'm about to wipe
Mhm.
myself, like, when
Well,
I
this
get
is-
uncomfortable.
this is
right?
one of the challenges,
I'll
and
turn it off.
you know, nothing in life is free, and there's some things that you're going to have to do if you want to do this,
Okay.
right? So you're right, and I'm going there in a second. Now, when it comes to physically what is payroll, meaning an actual payroll paycheck versus a dividend, you need to talk with your accountant about how much of each you might want to do. Personally, I have a certain amount of payroll, and my 401k contributions get pulled out of there and all this stuff, and I know the amount that hits my account. And then I have a dividend transfer where I just take some profit out every month of a specified amount. It's the same amount every month. I haven't changed those amounts in like 3 years, and I'm changing them now because Angie was like, you know, you need to kind of raise your salary a little bit, and I'm like, yeah,
Yeah, you need a raise.
and we just had to put the one kid in private school, so yeah, we're raising the salary.
Don't you make them 3%?
Well,
Yeah.
I'm hearing, I don't know if I was hearing you right, but I hear two different questions. One is sort of the proper structure, legal way of.
I'm getting to but your business doesn't make enough money. I'm getting there.
Yeah, thank you.
Just hold
Just
on.
making sure you heard.
I
that
understand.
one.
I'm walking you through a thing here, and we're getting to that, all right?
Sorry.
Promise you.
Sorry.
Yes.
We have 90 minutes.
Right? So, as I mentioned, you don't need a business entity for this. You know, living on a consistent budget, especially if you're not the only one in the household, there's a lot to be said for that. And then it can reduce the stress on your personal budget because you're not trying to wait until you get paid, but you know when you're getting paid and you know how much it's going to be. And lastly, this helps you avoid stripping all the profits out of the business because if I just drop a bunch of money in your account, you're more likely to use more of it than if I put a smaller amount of money in your account. I mean, if I give you $3,000, you're not going to spend $4,000. If I give you $5,000, you're probably going to spend $4,000, right? So, I mean, the way we've got it, at the end of every month in our personal checking account, it gets pretty low. I got the low balance alerts and everything set up. It keeps us from spending a bunch of unnecessary money. It's exactly the amount of money that we need to operate the household. So, because of that, then, more money can accumulate in the business account. Nakia, Kelly, everyone else is like, what if I'm not?
Patricia too.
And Patricia.
Everyone else is doing fine.
You're going to have enough cushion in the business to weather some slow months if you're going to keep that salary every month in the same amount. You can play around with this if you want. You can make the payroll, if you have payroll, you can make that small and you can take a discretionary dividend, or I don't know, you can play around with that however you want.
Keep
But
saying that. What is a dividend? Like,
dividend is I'm just going to transfer money from the corporate account to my personal account, and that's just profit. Like at the end of the year, I'm going to have salary and I'm going to have a net profit, aka a dividend from the business, and I'm going to pay tax on the whole dividend. Like that's but that money flows through to me anyway, so I'm just gonna use some of the profit.
Can I say something? So basically what he's saying is the dividend, which is the corporate account, is really that savings cushion. Remember, you made $30,000 last month. So you didn't get a $30,000 check paying yourself. Whatever that amount was, if it was 10, then the 20 went there. That's what he's
To the
saying.
dividend,
To your corporate account.
right, to the.
And so then so your corporate account, is where you will pull that dividend from. Because like the month of September, we all suffered.
So
I mean, last-
dividend amount, you changed that, or that's a set amount?
I've had that, it's been the same amount for years.
Okay.
It's it's just because I don't want to pay myself the full amount of payroll because that's not necessary, income tax wise and everything. I don't want the more I pay myself in salary, the more I pay in payroll tax.
And
Well, I'm noticing that. Nobody told me that part. I'm like, well, why am I paying myself and then you tax me so hard?
You have, but you still have to pay yourself a salary. But it doesn't have to be like a huge salary. You know, it's got to be, there's some guidelines around that, and Angie and Patrick are very good about advising you on, you know.
We'll be talking.
That's why she
about
told
this.
me to raise mine because we're way more profitable than we were last year, and she's like, you're going to need to raise the salary because right now your dividend is way too big compared to your salary. You need to bump up your salary. Yeah. Or she just
I'll pick
overheard that
your
we
brain
had to
more
send Hawk
about
to
that.
private school. So yeah. But the other thing is here. So number one, you know, if your business income is going to do this, and it always will, and you're going to set a fixed line, you got to set that line in a place where you've got enough cushion in the business account that in a month where you didn't bring in a whole lot of money and you still paid your salary, that there's some cushion in that business account. So I'm not saying that everybody maybe can do this right away, but I would like you to consider putting yourself onto some form of consistent income as soon as you possibly can, and maybe even start it really small, so you always have at least that amount, you know, even if it's not totally enough for the household or something, just to start getting into that habit and knowing that no matter what, I have this amount of money coming into the household.
What strikes me as makes sense to me coming into this from not doing it is to start with a very low conservative salary.
Yeah.
Whether that's legit, like whether it's set up that way or I'm just doing it.
Right.
But make it really, really low. And then this discretionary dividend idea, at least I'm beginning to speak the language of business, I'm better understanding it, and as I get better at my consistent income, I can adjust those things, right?
Yeah, and spouses love it. Telling you.
Yeah, I'm all about that.
I mean, we know how much money we're gonna make.
Yeah.
Wow.
That would change a lot in my household, I think.
Patricia.
It would change
I think
nothing
the
at
first
all.
important thing for me when I did is, you know, as Alex mentioned, excuse me, when we first got started, is find a reliable source so that you can have that conversation with them about your real picture. Then it'll come together.
It does.
You have to sit down with the CPA and,
Like his people, I use his people.
yeah, give me 1 second, that was my point,
Just calm down.
and it made all the difference in the world. So when you sit down, it's not a general thing. This is about customizing your business, accounting, P&L, et cetera, for you.
Right.
And it's different from each person, and you will learn so much from that 3-hour appointment.
Yep. The only other possible disadvantage of this is that you might need to find another way to reward yourself because you know you probably get a little high when you get a big commission check and the whole thing comes in your commission account. Now it's a little sick and twisted because that's not your money. Some of that goes to Uncle Sam. You know, some of that needs to go to some maybe some retirement. But if that is like me personally, I kind of don't care. I'm like, great, big commission check, whatever. I'm making my salary. It just gets stacked up in the business account and set aside, whatever. And then if I want to make a big purchase or, we want to do something like that and I want to take a larger dividend, that's a conscious decision. I'm not just month to month just squandering all the money that comes in. So, but you might need to find another way to give yourself a little reward. Maybe if you get it, when you get a commission, you give yourself a little, give a certain percentage of it. You go, here, find another way to keep yourself feeling good about, about having closings.
I wish I had this class before I set up payroll.
That's good.
You can change payroll on a dime.
I
I just
know,
changed
but
mine. What was that today?
Oh, no, don't worry. I have one-on-one P&L review with Alex, so I already know where I'm
That's right.
about to pick
That's right.
the brain.
Kelly said he wants a one-on-one P&L review.
All my top 20% will do it. Hire a bookkeeper. I could have left this slide blank and just had it say just that. Now, I went into a little bit more detail. I'm cool and I'm nice. But I could have just left it here. Tell me, do you recommend that sellers sell by owner?
No.
Why? Why?
They'll lose money and they'll mess it all up.
They're not a professional.
Yeah,
Right,
all that.
They can
All that.
get killed.
So do you recommend that you do your own bookkeeping?
No.
No.
Hell yeah.
Don't do it. Even Nikki eventually came around and hired a bookkeeper. Even if you
But let me go, I still do it.
are sick.
Because I double check hers to make sure it's right.
So listen, when you hire a bookkeeper, you're actually going to have a P&L every month. If you don't hire a bookkeeper, I'm going to bet some money right now that you won't have a P&L every month.
Right.
Because frankly, you won't have time, and even if you have time, you have a better use of your time. You just
Why
do.
you always gotta go there?
Because it's true.
We need to add a myth.
Add a myth, what do you got?
Don't overthink that a bookkeeper is like, oh my God, here goes this big expense. That is literally that held me in my tracks. I'm like, oh, they're talking accountant and then bookkeeper and all these people. And literally, so full disclosure, I use Alex's people as well. And literally, my bookkeeper, and I'm being transparent now, me not putting entries, not doing my monthly reviews, I may do every other month, but literally, when she sends me a whole sheet, Nikhil, what is this? Is it business? Is it personal? If it's business, what category does it fall in? She did at least 4 months of bookkeeping, organizing my life in all of maybe 2 hours, and she charges $30 an hour.
And mind you, that's not ongoing. That's the setup process that you go through when you hire one, because they have to get to know what are all these charges.
Mm-hmm.
After a while, you're going to get
They
0 to 3 or 4, depending on how many out of the ordinary expenses you have. Yeah, it's not even a 3-digit number. I pay like 300 something bucks a quarter for my business, my rental property that she does my bookkeeping for all my rental properties. You know, so it's like $100 a month for that, and I have a P&L every month. I would never ever have one without that, and it's done right.
Yeah.
I also like that I have a paper trail, because when she asks me questions about what was this, what was that, and I respond and I go, here's this, here's that. If I ever get audited, there's not going to be a question mark next to any expense in anything ever. So I like that a lot. And yeah, it's inexpensive, a couple hours a month. Yeah, it's not a big deal. That way, the time that you spend in relation to the finances of your business isn't spent scurrying around trying to categorize and look up and type in and copy and paste. It's spent looking at the document and understanding what it means about your business and making decisions based on that.
And she also tracks what your financial goals are for the year.
That's right.
And it's like
With your dashboard.
also.
So get somebody that's recommended by others in your field. Granted, bookkeeping is bookkeeping, but just like everyone here was talking about, you have someone that understands our bookkeeping practices. That's going to help you a little bit more than someone that doesn't, that you have to teach.
It's in the MREA.
That's right. Find someone. If you want to, work with someone that uses the MREA chart of accounts, you'll be able to compare. So I know, like, when I could take Nikki's P&L and Nikia's P&L and put them together, and I could actually compare them apples to apples. Meaning they could sit down with each other and go, hey, what can we learn from each other? Because those two documents are going to be in the same language, the Millionaire Real Estate Agent Chart of Accounts. It's also really good if your bookkeeper works well with your accountant, because bookkeeper prepares those documents, but they don't file taxes. An accountant files taxes, but they don't do bookkeeping. So it's good if they'll work together. It helps things a lot. So in summary, hire a bookkeeper.
Does the Angie book one rental account?
Yes, but that's not common.
Okay.
What are the steps to do that? For those that don't have a bookkeeper yet, how do you do it? You're going to set up your tech systems. I recommend QuickBooks Online. They can use it. You can log in from wherever. It's like $40 a month, pretty cheap, including the payroll. You're going to give them read-only access to your online accounts for your business, banking, and credit card. That means they can log in, they can see stuff, they can do the account links to QuickBooks, they can export statements, but they can't change anything. And that way everything pulls into your QuickBooks, and you don't have to keep your shoebox full of receipts.
Yay.
Yeah. You're going to go through an initial setup process where they have to clean up your mess. They're going to have to go through, like Nakia said, they don't know what does this code on your credit card statement mean, and what is that an expense for, and how should I categorize it? So up front, you're going to have to do some cleanup. That's just how it is. It's because you've been messy. If you hadn't been being messy, you wouldn't have to do cleanup.
And you're used to messy, so don't go in feeling bad like, oh my
Oh, yeah.
God, you're going to think that I'm so terrible.
Well, that's why they're there.
Yep.
They're there to do that for people who aren't going to do that for themselves.
Yep.
So.
I tested that. They really are.
Yes,
Just so you know.
So you're going to have a cleanup process where they have to familiarize themselves with your charges and your accounts and stuff. Then you're going to have a monthly review where every month they're going to check in with you about like how things are looking, if they have any questions, if they're not sure of any charges that they saw come through. You'll answer them, and then you'll get a P&L. Typically get a P&L around the 10th of the month if I respond quickly to the questions, right? If I take a longer time, it might take a longer time. But yeah, usually around the 10th of the month I have my P&L.
I still do my expense spreadsheet, so it's
We'll ease you out of that. We just send you like addiction treatment for that. It's like letting go, letting go, letting
Just let me know
go.
when you want to talk.
So, have I convinced you to just freaking hire a
Especially with
bookkeeper?
the
Yeah.
digital
Yeah.
receipt box, for sure.
Yeah, the shoebox.
Yeah, the other myth that I had was, oh my God, somebody has access to my accounting information.
Excuse me,
Like,
Alex, scoot over a little bit. I'm
Oh, sorry.
That's all right.
that's a myth.
Yeah.
They
Saying
have
nervous about
access-
someone having access.
Right,
to
I'm
your
thinking
account.
like, oh, you're just gonna go and spend. Now you have access. No, they have access to view the
Read only.
things, the items. Like literally, I remember with my setup, when she set up QuickBooks, all I did was enter my username and passwords, and now it's locked in her QuickBooks
Yes.
systems to just be able to see the statements, not to be able to authorize charges and go spend on Amazon or something.
As long as your bookkeeper doesn't lead with, "Hi, I'm a Nigerian prince, and my uncle with many monies would like to." As long as they don't lead with that, give them access. You're fine. So that's hire a bookkeeper. So hire a bookkeeper. We good?
Yes.
Definitely go ahead and hire a bookkeeper. So here, let's talk about learning the actual P&L. Now, I'm going to tell you right now, I'm looking at the clock. It's 4:05. By the time 4:30 rolls around, you probably will not have gotten into the income tax portion of
Well,
this.
go get the tequila out the refrigerator now.
Nice. No, that's the involved
talking.
So that we'll probably schlep that in the next session, and this may become a four module thing, or maybe
That's
just
all
do
right.
longer ones in the
We're good.
future.
Well,
We're going to get to a P&L session now.
we
Okay. So first of all, what is a P&L? Stands for profit and loss. It is a standard business document. That means I don't care what business you're in, there's P&L, or there should be, for your business. And if you went to most other business owners, they would have one, and they would think it's weird that you don't. It is a standard business document. It's also known as an income statement. Same thing. Income statement, profit and loss. Okay. What it shows is what went in and what went out over a certain period of time. So sometimes when people explain financial documents, they'll say that the income statement or the P&L is like a video. It covers a period of time of what happened. Whereas a balance sheet, which is one of the other standard business documents that we don't, in our business, isn't super important. If we were in an inventory business, the balance sheet would be more important. But a balance sheet is like a picture, like a snapshot, where it shows you at any given moment, where's all my money, what do I owe people, what do they owe me, right? That's different, and that's not as relevant for the real estate service business. We want to focus on the P&L. It's a video over a time period. Over this time period, what money came in, where did it go? And that's what that document is. It's also the only way to actually answer the question, how much profit did I make? If you don't have a profit and loss statement, how exactly would you know, like, how much profit you made? You don't. What you typically do is you look at your bank account and you see how much money is in it, but that's not necessarily indicative of your profit. So it's the only way to know. So if you want to set a profit goal, and you have a profit goal, which I recommend you do because nothing else actually really matters, other than the profit that you kept at the end of the day, you're going to need a P&L in order to know where you stand on that and if you reach your goal. So does everyone understand then what the P&L is? Or do you have any questions about that? Good on that part?
Yep.
All right, so why is it that it's important? Well, number one, it's going to give you actionable intelligence on your business. You're going to look at it and you're going to see stuff and go, oh, because of what I see on this document, I need to go and do blah. It's going to allow you to make decisions in your business. As Joanne discovered recently, it's also necessary when you're applying for credit, including business credit, which, by the way, is a thing, like where you have a credit card that's not in your personal name and doesn't show up on your personal credit report. You can't get that without a P&L. And when you do it regularly, most of your income tax prep is done. It honestly makes that process pretty easy. Like, I don't dread it. I don't even care. I'm like, okay, well, let's wait and see what I have to spend on. It's not a big deal. Wouldn't that be nice? For income tax time to not actually make a difference in your life? It'd be cool. And to do it on time, file your taxes on time? Oh, yeah! Did I go too far?
One thing.
Wait, let me back up here.
I thought that was the next class.
Right?
Slow down.
So,
Like, hey, Nikki, you gonna file your taxes on time this year? Yes, Alex.
yep. So let's start learning it. We're gonna give you the basic framework, and then we're gonna get a little bit more detailed, and then we're gonna look at a couple samples. Okay. So the basic way that a P&L works is this income expenses equals profit. That's the basic formula how the documents are built. I taught my daughter this when she was like 11. She wanted to sell these cookies that she was making to earn money to pay for her band trip. And she did, by the way. And we used all these concepts for her so she could understand how many cookies does she need to sell to go on the trip. And it helped her do that. So she knows income minus expenses equals profit. That part, that's the basic level. If you get add a little more color to it, what you would do is you're going to divide your expenses into two different categories. And that would be cost of sales versus operating expense. Those are two different kinds of expenses. And every P&L you see, it will be broken up this way. So what it'll look like, and we're going to define those here in a moment, is income minus cost of sales equals gross profit or gross margin. And then your gross profit minus operating expenses is your net profit. In real estate, cost of sales versus operating expense. Now, if you ever took an accounting class in college or whatever, you probably heard cost of sales expressed as cost of goods sold, or COGS, COGS. That's commonly the language, but we're not in a product business. Yeah, we're in a service business. So we don't have a cost of goods, we have a cost of services, cost of sale. So when you close a transaction, certain money never even hits your account. What is that? What are those things that it was a part of the gross commission, but never actually got to your bank account?
The commission split.
Commission split and royalty.
Well,
no, those here we're paying on your monthly bill.
Referral fees.
That's about it. It's a short list. Now they're big chunks, right? These can be big chunks of money, but there's not a whole lot of expenses in terms of the different expenses that fall under cost of sale. Basically whatever your company cost is and referral fees. Now if you're running a team, whatever you pay the agent on the team that closed the deal, that's also cost of sale to you. It's whatever stuff never hits your account. Like when an agent on my team closes the deal, it's not like the money hits my account and then I send it to them. No, it's paid directly from the brokerage. So that never touches my account. That's a cost of sale. Everything else, every other expense is an operating expense. Monthly fees, your board dues, listing, marketing, lead generation expenses, signs, lock boxes, photography, your money that you're paying Zillow for some reason, all that stuff is operating expense. All right. A more advanced version of it is when you basically have subcategories of all that, right? So you say, okay, well, in my income, what are the different ways that I got that income? and you say, well, inside of cost of sales, which of those, what did I pay out? How much was company expense, how much was referral fees? And then inside of operating expenses, creating your subcategories. So I want to kind of build into that and make sure everyone understands the way these documents flow, and then we're going to look at them. Do you have any questions on this? So every P&L in business is built. All right. And then in terms of these subcategories, we use the Millionaire Real Estate Agent chart of accounts so that we can all measure up against the standard of like, okay, what is the best of the business doing and how do I match up to that? So we use that chart of accounts, meaning a list of categories, to categorize so that we're all categorizing the same way. Okay, here's how you read it. First, at the top of the form, it's your money in. That's your income, also known as revenue, same thing. Then you're going to have your cost of sale, or if you're in a product business, cost of goods sold. Which cost of goods sold is if I sell widgets, I'm going to say, well, I sold this widget for $10, but the widget itself cost me $5. Therefore, $5 is my cost of goods sold. Cost of sale is what we described. Then you're going to deduct operating expenses, and then you have your net profit. There's generally two forms or two time periods that you're going to look at, and one is your single month, the second is your year to date. For those of you that work with Angie, you usually probably get both, right? She's going to send you, so just send me, here's your August P&L, and here's your year to date through August P&L, right? And then after you're working with them for more than a year, they'll give you a prior year. So I've got my August versus last August on the same document, and then I've got my year to date August through year to date August of last year side by side, so I can do comparisons and stuff. So that's typically the time frames. What's that?
So that's one thing I remember you telling me, we won't have that our first year because
Right.
there's nothing to compare to.
They didn't
prior
do your
year.
books, so they don't have that information. Yeah.
But they will grow into it, finding as much information as the prior year to kind of help build. Because when you gave that to us as an assignment, she's like, well, just let me see everything, your tax returns from the prior
Exactly.
year and where you are now, so.
When you get to December, you'll have a 2021 over
Yep.
2020.
Mhm.
Yeah. Yeah, for the year. Yeah. All right. Here is a sample profit and loss template. I snipped this out of Business Planning Clinic or Agent Financials, one of those two courses. I just grabbed a sample. This is a sort of intermediate one. There's way more categories, like subcategories of all these things, but these are sort of the basic intermediate categories. So you can see, my light doesn't work on the screen. So at the top, you have income. Now in here, they said residential, commercial, other. Other might be like referral fees that you received or something like that, right? Now if you do property management or leasing, you would have those broken out into separate categories, right? Then you have your total income, gross commission income before all expenses. Then in cost of sale, now this is oriented again towards like a team, but in cost of sales you might have, company dollar, royalty, referral fees. If you don't have other agents on your team, then you wouldn't have listing and buyer specialists, but you would have those categories. And then you have a total of your cost of sale.
Good company dollar and royalty.
That's what I said.
Okay.
That's literally what I just said. She's killing me, Smalls. So then your gross profit is your total gross income minus your cost of sales. And then you have your gross profit. Next is operating expenses. And here's where you've got your base level categories, and there's subcategories to your heart's content, but compensation would be if you're paying anybody's salaries or wages. Lead generation, occupancy, which is like rent if you're paying for an office or something. Education and coaching, office supplies, comm-tech, things like internet subscription, cell phone, all that stuff. Auto expense, office equipment, as opposed to like these are like consumables. Office equipment, and then insurance. Now, there's other stuff you might spend money on.
Do
Again,
you put your salary under compensation?
there's a management salary, and then there's admin salary. We have ours broken out by each person so that you can see, who's going to what. So this is all your operating expenses. Then you have a subtotal. What are all my operating expenses? Then you have total expenses, which is cost of sales and operating expense, total expense, and then business profit, which is your Gross income minus your total expense, that's profit. Now what's not in there is stuff that we say is below the line, and that's because it doesn't relate to the day-to-day operations of the business. So that would be like if you have interest income from money sitting in an account, in a business savings account. Well, that doesn't really have anything to do with your real estate business. So you had it, you earned it, but that doesn't belong up here. So we say that's below the line. Vendor supplier income. Okay, if someone was, paid you to sponsor one of your client events or something, you might not want to consider that a part of your income. It's not really real estate income. So you might put it below the line. Coloring profit share. It doesn't really relate to your business, but you want to keep track of it. You want to have it on your P&L, so put it below the line. And then that other income, those are the categories that we're not going to talk about. Then you have below the line expenses. If you're giving profit share, if you have a team and you have a profit sharing system for within your team, which is something that people do at a larger scale, you can put it down there. Income taxes, again, we want it for the business. Your income taxes are based on if your spouse has income and if you have rental properties, all sorts of stuff that has nothing to do with the operations of your real estate business. So it's below the line. So we're really looking at, to evaluate the performance of your business, is everything above that line ending in business profit before tax. All right, checkpoint. Do we understand this?
Yeah.
Yeah. Alex, where's your MLS dues and all that other stuff? Where's that going?
Your MLS dues, there's a subcategory in the education and coaching.
It's okay.
There's a subcategory in there that's dues.
Okay, right.
And so, yeah, you put it in there.
All right.
And they're due by Friday.
Yeah, that's right. If you're Main Street, your dues are due Friday.
Friday.
Yeah.
Is that annual or just about?
That's your MLS, or, semi-annual MLS. Say that again?
That would be considered operating expense?
Yes. Yeah, if it's not withheld at closing, if it lands in your bank account, it's an operating. It's not, if it lands after that, it's an operating expense. Yep.
Is there a benefit to, if you're not a team yet, or you're a partial team or whatever, is there a benefit to still designate what you're paying yourself as a listing specialist by, is there a benefit to doing that and setting it all up that way, or is that just making it overcomplicated?
My personal answer would be that's probably overcomplicating it. There comes a time in team growth when you start looking at the possibility of moving out of production, where you're no longer selling homes, that you might want to start accounting for your work in terms of the cost of sale, because you want to look at what the business is going to perform like when you're not doing those appointments, instead of all that money sort of rolling up into profit. But I think if you're a solo agent, or if you're a level 1 through 14, it's probably not worth it, just in my personal opinion. Yeah. Any other questions on the template for the P&L? Let's look at a sample. Same template. We've condensed some of the categories, but it's the same list. We got rid of all the stuff that was below the line. This is just ending with your bottom line net profit. In this one, they had one column that was their budget. So they went into the year saying, here's what I think, here's what I'm going to shoot for next to actual. So if you want, when you talk about making a budget for your business, you would actually use the same template. You would use the P&L, and instead of it saying what happened, you would say what you intend to happen. So that's how you would make a budget for your business. The actual is the column over here. So in this case, this person generated $260,000 in residential income. Now, I always prefer for that to be broken out, listing income and buyer income. I want to know where did it come from, right? And $10,000 in commercial, $270 total. They paid out $60,000 in commissions. Now, if you were thinking about if that person was at this office, 19 would have gone to the office, 3 would have gone to international, which leaves quite a bit left there, $38,000. What would that have been? What would that have been?
$27,000. Either they had a team member or they paid a lot of referral fees.
Right. Either they got their leads from all referral sites or something like that, or agent referrals, or they're splitting commissions with the team. Exactly. Yep. So their gross profit is $270 minus $60, $210,000. Here's their operating expenses. Now, 43 in salaries and benefits. Now, that could mean that they put themselves on a salary, or it could mean that they hired somebody. You would have to ask. These documents have lots of stories behind them. Yeah, lead generation expense. You said you're going to spend 6, you spent 34.8. If I were asking this person questions, there might be some expletives in this question. Education coaching, they plan to spend 6, they spent 13.2. I'd ask about that. Occupancy, rent, they're paying $200 in rent a month. Office supply expense, contact, blah blah blah, car, blah blah blah, whatever. Okay. So there you go. The net 90 grand before tax. All right. Out of curiosity, what was their profit margin? Meaning, what percent of their total gross revenue did they net in profit? What percent?
33%.
33%? Wait, what? You did it with a calculator, right?
Yeah.
Okay.
So their goal is 30%, right?
Those 40.
Stretching.
Well, it depends.
REA is 40.
It depends on the structure of your business, how many agents you have on your team, if you have an assistant. So the desired or the best practice net profit margin does vary a bit from, as the team grows. It starts higher, it goes down, it goes back up. But this person, I think we can all agree, this person could have net a lot more money. They're probably not holding their expenses accountable, specifically as it relates to lead gen. Right? They're not getting that desired return on their lead generation. So,
There was no way to get a copy of that.
this?
Yeah.
This is out of Profitability Agent Financials, KW course. You can download all the manuals. They're going to connect. That's where I got it.
Oh, okay.
Yep. And the template before it, this is from Business Planning Clinic, which we're teaching, by the way,
On the 30th.
in this room next Thursday. Business Planning Clinic, right here. So in that, we'll walk you through each of the 4 fundamental models. So you walk out with your 2022 business plan. So talk about your lead generation budget. The budget model is one of the 4 models. So, all right. So we've gone through and we've opened up what is a P&L, why to use it. We've actually looked at a P&L. Everybody's still awake right now, and I see eyeballs and I don't see any tears. This is a notoriously challenging topic. How are we doing?
Great.
You good? Wonderful. So now you know how to look at the document and just know what it is. But how do you use it? This is how you use it. You can ask yourself some questions. Now, these are not the only questions you could ask. Here's some questions that I ask myself when I'm looking at my P&L. Just right out of the gate, does this look like I think it was going to look? Is there anything out here surprising? Sometimes, the one I got this month, I'm like, yep, that looks like I thought it would. Other times I'm like, hang on a second, what's up with that? Does anything stand out as extraordinarily large or small? Now, if something looks too small and it's an expense, don't be like, yay, that means, but if it looks smaller than you think it does, your expense might be hiding in a different account, in a different category or something, and maybe you misbooked something, or maybe you're not investing in your business enough. I don't know, but too big or too small warrants a closer look. Nikia can tell you this one. I do not like other and miscellaneous.
No.
I don't like it. Doesn't tell you anything. What's the point of doing the document if you got a bunch of money in other? It doesn't tell you anything about.
IRS don't like it either.
IRS probably doesn't like it. So if I get it back and anything is in other or whatever, I'm like, what's in there? And let's get it out. How am I doing compared to goal? Where am I at? Right at this point with your August P&L, you should be 8/12 of the way to your goal. What is that? 2/3? 66.667% towards your goal. If you're on pace, how are you doing compared to last year, last month? If you got 2 years of records, it's going to be showing you right there. And how are you doing compared to the MRE model? Are you pacing with the best of people at your production level? Or are you spending more or less than that on certain things? And again, why? Right? Look into that. When you get the Excel file from Angie, which is the dashboard, which doesn't come directly from QuickBooks, she's added a column there that has the percentages, so everything is next to each line item is the percent of gross commission income. So you can compare it straight with the MREA P&L. Are there any expenses that you should reduce or eliminate? And are you investing enough into your high impact areas? So typically, if you're looking at this and you're comparing it to the MREA, and your expenses in labor and leads are way low, you might want to take a look at that. You might actually be starving your business of the resources that would allow it to grow. There's lots of other questions you could ask, but this is some of the stuff that goes through my head. I like to just kind of explore one line item every month. So a lot of months, not every month. Like this month, I didn't do this. It looked like I thought it was going to look. Nothing there was surprising or intriguing. Nothing to look higher or lower than I thought. All right, cool.
I know that rental income?
Say what?
I know that rental income came.
That's a different P&L entirely.
Ah, gotcha.
I got that, and that would look how I thought it was going to look too.
Yeah.
Yep. I'll actually go sometimes and I'll go log into QuickBooks and pull up the line item that I want and go and expand it, and it'll show me every charge in that account. And I'll go, what was all this? If something looks too high, I'll go, let me go check. Well, if I were trying to put together the P&L, I'd never have time to do that.
Never.
Right? But when I look at the document and something stands out, I might say, let me take 5 minutes and go log in and just look and see what all is in there.
I don't know the login.
Google Chrome knows my login. I don't.
I don't think it knows it either.
Show it to your coach or show it to your Market Center leadership contact. For anyone here, top 20%, that's me. Otherwise, it might be Val, it might be your productivity coach. But show it to somebody else. Have them take a look at it. Have them look from a different pair of eyes. You can do a peer review. Anyone with a different perspective is going to see things you don't. They might ask you questions that you didn't ask yourself. Yeah. And you'll learn from theirs and ask them questions about theirs. And you can also go and open business credit. Like I said, I have 2 primary businesses. One is my brokerage business, the other is rental properties. I have a business line of credit for each of them, and it's not on my personal credit report. If I go apply for some personal credit or something, that stuff doesn't show up. My commercial mortgages, none of that stuff shows up. It's all in the business. Yeah, Patricia?
The business line of credit, would you mind sharing with us because I know you know, because that's why you the guy, that's why you make the big bucks in the office. Would you share with us the best business line of credit? I think that's very important because leveraging that is, you know what I mean?
I have both of mine are with Wells Fargo.
You scratch your head. Do you
Is
really
it the
like them?
is it the best? It's fine. I mean, one's really big, the other one's only kind of big. They do what I need. I pay them off every month. I get rewards points.
Absolutely.
I cash the rewards points for checks and I put them in my personal savings account. And I do things with them like buy pool or.
Remember, I caught you doing that at one. I'm like,
Yep.
what are you doing?
Yep.
Yeah, I'm getting all
That's
my
right.
checks all over. I'm like, what's
I hide it all. My profit share, my credit card rewards.
So, question for you in terms
Yeah.
of Wells Fargo. Wells Fargo, you said one big and one is not, but you like them for there's no need of reinventing the wheel.
Yeah.
Do you have a business relationship over there with someone?
Well, what's weird is that they don't even have physical locations right around here.
Right.
Excuse me. So I opened those a long time ago, and at one point I worked for Wells Fargo.
Okay.
I didn't have, not when I had these. I worked for them in 06, 07, and I opened this stuff, later. I don't know, 2009, 2010, something like that. So, but it's been fun. I can move money around, and I get good reward points. But I don't know. I mean, they're fine. There's probably lots of options, but it's just something you can use your P&L to do. It's nice. So we're at 4:30. We were not going to go into the income tax portion, which is kind of what I thought was going to happen after I finished the slide deck. I'd like to get your ahas on the P&L portion first, and then from the whole conversation today. So in relation to the P&L specifically, we just went over what it is, why to use it, how to get one, hire a bookkeeper, and then we went over, the sample documents, questions to ask yourself, other ways you can use it. So what are your ahas from the P&L?
It's an organization tool, and you get your taxes done in a much more efficient, quicker way.
Yeah.
My biggest aha is,
Say it again?
don't do it yourself.
Because you won't. Just don't lie to yourself, Tom. You know, you're not going to do it. And neither am
Get out
I.
of the sand.
I'm not going to do it.
Professionals do it.
You want to know how many P&Ls I've done for myself?
None.
0. Because when I told myself I was going to do it, I never got around to it.
You're leveraging a professional to do it is an aha, and that is an actual living document. You can actually look at your business and actually see. And I think when you don't see, you make horrible decisions. And when you are looking at the profit and loss statement and reviewing it the way we should be doing it, then we become better at making business decisions financially.
Yeah, you use it as a tool.
Yeah.
It actually helps you do something.
Yeah.
Kelly, you have one?
I think I can see how this is holding me back to not be using this. Or another way to say it positively is how much quicker I could run and move and grow. And I've done almost all of the heavy lifting on this. It's like down to like one little last thing that I've just been like not dealing with.
Yeah.
And
Is
as
that
soon
getting
as
a CPA or getting a bookkeeper?
I got all that, I gotta just review a couple emails and say, yeah, this is how it is, and we're rolling. I mean, it's that
Yeah.
ridiculous.
That's great.
Well, good. Hopefully this will get you across the finish
I
line.
like to make small mistakes with big impact.
There you go. Wonderful.
My
Nakia.
aha from the P&L perspective was definitely realizing in business. Colleen challenged me one day and she said, "Are you profitable?" And I'm like, I didn't really know. Because we can fool ourselves to thinking, again, you get commissions and all of this and it's sitting all in one account, but you forgot that you still have a family, you still have to operate out of that. You're looking at one account, you're looking at these big numbers, but don't fool yourself thinking that we're really profitable. What is your business actually making? Because you still have to operate in a whole separate fashion on a personal level. So the P&L literally helped me see from a business perspective what I should or should not be doing, and when I am profitable and not profitable, so I can continue to do those activities that did land me profit that particular month.
Cool.
Yeah.
Good. All right, ahas on the whole conversation today. Now remember, we talked about managing expenses. We talked about investing accountably, concepts like red light, green light, your 5x return. We talked about paying yourself a salary, a hot topic, controversial in this room. A lot of pushback on that. And then, of course, we've covered the P&L portion. Any ahas from the whole conversation today, aside from what you've already shared?
I got a lot of work to do. I'm not doing any of that stuff, so, yeah, I
Yes,
need,
we would tell
yeah.
How will you start? Pick one thing. How you start.
I think with the accounts.
Yes.
So I'm
Okay.
gonna start with the accounts, yeah.
Yeah, when there's a lot, that's okay. It's good that you see what the opportunity is and identify at least what you'll do first.
Yeah.
And if your action step is to do the bank statement review, just do that. Start there. If your action step is just go open an account, you can do that today. It's not even 5 o'clock. You go open that today. What else? Other ahas or action steps?
I think that what holds a lot of us back, held me back for a while, is either embarrassment of letting people see, like you don't want to admit that it's all a mess, and yet every business owner I've ever met is a mess. So don't do that anymore. And number 2 is perfectionism, which I don't really struggle with that one so much. But that is a thing that someone's like, I got to get this perfectly in an Excel before I even hand it over.
Yeah.
And those things, I think, just stand in your way of getting it done.
Separate business from personal. I'm sorry, go ahead again.
No, go ahead.
No, both.
Nikki already had one.
Well, I was just going with Kelly, but go ahead.
Come on across the street.
So across into Kelly, when you said the perfectionist part of it,
Truth hurts.
because Alex said to get me to recognize that that's probably one of my things that holds me back all the time. Don't overthink this. It was a lot of information we covered, and this is literally like, I can tell you I took business planning probably 3 times before it just clicked and said, I think I should start doing like one thing. So like Alex said, pick one thing and start there. Don't look at it as being, we just learned all this stuff, and it'll sit you to where you start freaking out, and then you're like, I'm not gonna do it. So Kelly, the other thing is, don't feel bad also, because I almost recognize this thing that you're talking about that you gotta recognize, because Angie sent me this whole list
Yeah,
probably
I got it.
2-3 months ago that
Yeah.
she's like, okay, thanks for that one. Now here's a whole nother one. So
They just keep coming.
time blocking, was the only way that I did that, because I kept saying, I don't wanna look at that to figure out what was that thing. So time blocking and literally saying, stop overthinking it, give yourself 1 hour to just look at this one email, and literally, guess what? It took me 3 months to do that, and I finished it in an hour,
Yeah.
but I
Right.
overthought it.
Right.
Mhm. So, yeah,
Yeah, and they get, those lists pretty much go away.
yeah, they start going.
Yeah.
Separating your business, from personal, was huge too. That was a good, you said profit and loss, but separating that was huge for me too. And just being able to, use any expenses that I use. I actually am a fan of Costco. So they pay a lot of rewards. I put everything on Costco, everything. And I've never had a card that paid me back before a year, and I'm on almost $700 in free money. So, yeah, wink, wink. Yeah.
All right, so,
And don't
Couple
forget,
quick
like
things.
our ethics
Good job.
training.
thank you, everybody. If you have feedback, or if you have a new name for the class, I appreciate it.
No, I like it. It's fine.
Send that stuff to me, and then remember, part 2 is gonna be on, October 27th. Put that in your calendar. And then our business planning clinic is next Thursday, 9 o'clock.
Thank you.
Most of the day here. I put 3, it's actually 3:30. It goes 9 to 3:30. Yeah, get registered for that if you're not yet. And we'll get more
What time is
stuff.
October 26th?
Thank you, everybody.
Thank you.
Thank you. Thank you.
Well, you have a, we have a,
Oh,
yeah.